Hello, hello, hello. Let me know if you guys can hear me out there and the microphone sounds okay. I know that the music is playing a little loud, but I will be turning that down. Just let me know if you can hear my voice okay across the various streams that we have going on right now, including X, Twitch, YouTube, and the RDP streams going on right now as well. If you can let me know. Okay, so you guys can hear me over there, and yeah, you guys don't have a delay. Yeah. Okay. So just waiting on some of you guys over in the public chats. If you can hear me, go ahead and let me know in the chat there. And I will be getting started very shortly here. All right, so it sounds like everybody can hear me okay. We're gonna get rolling here in just a moment. Just getting in, sitting down at the desk, so give me 1 second. All right. Let's roll. Oh, let me take care of the music first, and then we'll do the intro. Turn that down for a moment here. We'll come back and throw some tunes on when we're in the latter portion of the stream. But let's start out by saying welcome to Landy's Crypto Corner. Today is January 19th, 2024. And we are just doing another live stream. It's going to be a little bit of a chill one today. We're going to start out with some technical analysis, and then we're going to discuss a few different things based on some of the questions that I've gotten from you guys publicly and privately. If you do want to message me privately, you can message me on x.com. Username is CryptoLandy. If you're not already following me over there, please message me over there. I do prefer that you message me publicly, but if it is something urgent, there are other ways to get a hold of me as well. And basically what I'm trying to say is my message box is filling up over on x.com with message requests from people that aren't actually following the account. And if I don't follow you, you're probably not going to get your message through. So that's where you would probably want to follow me and then tag me publicly, make me aware that you have sent a message. And then I can go and look at it. I get a lot of spam these days, especially from exchanges. So kind of weird. Don't have a really big following, but yeah. Anyway, let's roll into the analysis for today. Here we are looking at Bitcoin on the daily chart. And we can see that Bitcoin has now initiated a bounce off of the lower second standard deviation in the lower term timeframes and tagged the upper first after losing it yesterday. So this is in those lower term timeframes, a bearish retest. If it does pick itself up and close above there and or trade above there in the medium term timeframes below the daily, be aware of the of the close open at around $43,000 to 43,200, where we're going to look at the weekly, and the wick high here at around 43.5 to 6, just under the basis band here, which is coming in at roughly 43,800. If Bitcoin does trade above there, that will open up the area in between all the way up to the upper first here at 45.5. Now that would be on a close. Check the setup on the lower term timeframes. It might be something that's front runnable if the structure looks good, but I would highly suggest waiting for a close that breaks this downtrend wick high, in this case at 43.5 to 6, that then also regains that basis band on a close for the daily. You'll have to make a judgment call. This is not financial advice. But if we do see Bitcoin close above the basis, we'll have, first target to the upside being that upper first around 45.5 eventually. If it can hold above there, that being the basis band in the lower term timeframes. If it does get above the upper first, then we're looking right back to the highs on a close, somewhere around $47,000. And of course, that would also open up the wick high area, $49,000 to $50,000 and above, and above if we do see closes above that wick high at $49,000, somewhere in the mid to low $50,000 region. On the other side of that, if Bitcoin now closes below the lower second standard deviation and drops this wick low at 40,150, you could take $40,000 as well. Then I would be looking somewhere around this consolidation high side structure first, around $38,500 to $39,000 at the monthly and weekly. Of course, there is also a higher low structure over here that was built off of the high side region of this sideways and up consolidation from November into December. This is coming in at around 37.2 to 3 on the lows, with the wick low coming in around 36,700 or so. From there, we start looking at the close open that came in around the highs prior on the sideways and up consolidation, which is in the $35,500 to $35,000 region, which is a monthly close area. So nothing too crazy. This is all stuff that we had previously talked about and that I talked about in yesterday's Staring at Charts video. Excuse me, having a tough day today. Let's see. What did I want to get to? Oh, yes. We want to look at the Stoke as well. If we do see a low put in, this would be, a good indicator that not only would a low be put in, but that Stoke will either front run it or follow it. In this case, closes above 41.8, in this case 41,760 or so, would turn Stoke initially. That's only the K over the D cross. You would need to see follow through in the subsequent closures, in this case. And a 3-candle close low is really only going to come in from where Bitcoin is currently trading on any closes above the open of yesterday, and that's coming in at 42,737. So you take like 42.8. Then we would see a 3-candle closing low. The criteria would still need to be met for it to take out the swing high here and closing lower high. Closing lower high is coming in at that 43 to 43.2, depending on your exchange. And then the wick high is coming in at, around 43.5 to 6. Need to see that area taken out. Then we would have a downtrend break. And that would be a downtrend break on a close and a swing, or taking out the swing high in that case. Then pretty much confirm that things are going to at least test up to the basis, and then take a look at how it reacts in that area and higher. Now, the RSI has the potential. The low was called back here. This was a failure. And I want to point out this failure as well. the three candle low side structure, and this is why I harp on the swing highs being taken as well after you see a low set. So we have the three candle low, we have the bear candle from the 14th, we have the bull candle with the wick high coming in around that 43,330. And then we had a close that set a three candle low, but it did not close above the prior wick high. It did run it at around that 43.5 to 6 area, but it did not close above it. And that's one of the reasons why I have this very strict criteria for trend changes. You don't just want to see the low being set. In this case, it's not even for a trend change, but the reason why I'm stressing, if Bitcoin does rise, it needs to take out that 43.5 to 6 is because it would be a trend break, not necessarily a trend change. But in this case, this prior three candle low, well, this never closed above the wick high of the 15th. And in that case, it did set a three candle closing low, but it did not set a decent swing low. It did not set a low that passed the previous wick high on a close, which means that we're not looking for continuation. There, I finally got it out in a way that was proper. In this case, it did set a swing low and then a swing high and then a swing low. But in between that, we did have a closing low set that did provide, a drive of hidden bullish divergence. If we do see a low set, and again, that criteria is going to be on any closes above 42,737, 42.8. Well, it would still need to go and take out the wick high at 43.5 to 6, but we would see another drive of hidden bullish divergence off of it. Now, that is only right now, it is only possible from this particular area. If price does fall further, then we would have to search back a little bit further in the in our bull div bag here for hidden bullish divergences. And in this case, you can get a little bit of a bias here on the 12-hour as well. 12-hour has the same criteria. We need to see a close. Oh, actually, it's a little bit lower, 43,500 to set a closing low. And again, same criteria on the high, though, needs to take out 43.5 to 6 on a close, get above the basis here as well to then start targeting the upper first, somewhere around $45,000. I do suspect that that's going to come down a bit coming into close today. So it's probably going to be, around $45,000 even to the upper $44,000 region. In this case, we do have a swing low to a swing high to a swing low. So it is a downtrend, not just on swings, but also on a close. We did get a closing low in here on the 12-hour on the candle of the 15th that then came down and got a closing, closing lower high to lower low structure that could be developing here. So don't fight the trend, but it is a lower term time frame trend to a daily downtrend. And I wouldn't be looking at this as bearish as some, at least not yet, until we see a range break to the downside. Now, I do want to call out the Stoke here on the 12-hour. And we're going to compare this to the 4 and 6 hour. So Stoke on the 12-hour is now pivoted at 40,800. So closes back below there. And we would see the K cross back under the D read here. But in this case, it is pointed to the upside. We also see that there is there potential for bullish divergence? Yeah, it's just really long-term bullish divergence. I don't think it really matters. In this case, you want to see some local trend, in-trend bullish divergence. Would it be able to get some in-trend bullish divergence? Yes, it would be available if the 12-hour can set a closing low. This particular indicator will call this a closing low if it closes anywhere above the 12-hour candle from this morning, and that is above 41.5. My criteria is a little bit more stringent. I need to see the close up here at around 42,500. So that's where I would say, yes, that bullish divergence is valid. It is only a hidden bull div, and the primary targets would be the top side swing high to close. And of course, that is coming in at that 43.5 to 6, closes coming in around that 43.1 to 2. So keep that in mind. Now, when you compare this to what the 12-hour or the 4-hour to the 12-hour, I should say, we can see that the 12-hour did get expansion to the downside and mean reversion right back to the basis. Band spread is going to remain intact for a little while, depending on how price trades over the weekend. This is a first pass rejection of the basis. It can come all the way back down to the lower second, and that is at 40,006 to 700. And as long as it is holding that area, it's probably good to try back up somewhere around wherever the basis lower first updates to. If it does drop the lower second, it then needs to subsequently drop this current wick low of this move, which is coming in at 40,236. Now that's very close to the actual lows here at 40,150 on Coinbase, $40,000, maybe slightly under on some other exchanges. So I would keep an eye out for, any candles that close under the lower second, break this wick low, and then start moving through the actual lows. So that is what I'm going to be watching. If it does regain the basis, which is currently at 42,136, then the next target is around the upper first, which is coming in at 42.8 to 900. Now this is likely going to be around the 42.8 region when this updates at close later today, unless Bitcoin pushes up towards it in between now and then. If it does close above there, then the actual prior consolidation before this little breakdown does become available all the way up to around that upper second at 43,650 or so, likely going to be more around the 43.6 range. So we're getting a lot of confluences with our band levels and pivot levels. This is a downtrend. The trend is your friend until the end of the trend. When you see a trend break, that might be indicative of the end of the trend. But if we do see something like, let's do this. If we see something that comes up like this, we need to see or be on the lookout for either higher lows that then come up and take out that, higher high trend break. You look for higher lows. You look for, equal lows as well. That would be something like, coming down all the way to the wick, or even swinging it on divergence and then coming up and taking it out. And then the other scenario that would be more bearish is coming up, swinging it, and then dropping the lows. So you get a bit of a deviation. So something to watch for over the weekend coming into Monday. It is, it's getting kind of critical on some of the lower term timeframes. So I'd be looking for consolidation at minimum for a little while coming into the weekends, and then just watch the low side structure if Bitcoin does start to trade back down there into the low $40,000 region. The 4-hour is pivoted at 40,681, and that is right around that lower second standard deviation. We can see that there is multiple drives of in-trend bullish divergence. So we can kind of gauge where things might head on RSI should it keep pushing in the upside direction to the midline here. We're looking at around 42,250. If it does head back down to the SMA here, that is a 12-period SMA. That's around $41,000. And the bearish control zone is coming in at 40,800. So again, we're getting confluences all around here for some of the other pivots. Let's jump over to the 6-hour and see what's going on here. So we did have the drive of bullish divergence start to develop already and paint on this candle here about 2 6-hour closes ago. And in this case, it still has not met my criteria for the 6-hour, which is a close above the bear candle that broke down. And in this case, it's at 41,800. So that area has been tested with this current 6-hour high coming in at around 42,160. If it does close above 41.8, that would also be regaining this weekly area here. So this is the Bitcoin in 60 seconds chart that you often see on the shorts videos here on YouTube and on x.com. If Bitcoin does regain this weekly here at that 41.8 and the lower first, which is right there at 41.8 to 9, then the next weekly area to look out for would be the daily closes up here at around that 43,200. And then, of course, above there, we have the confluence with the highs coming in just underneath that basis at around 43, 5 to 600. Basis is slightly above there, coming in just under 43,800. Of course, above there, we can see that the upper first is still skating right on the bottom side of this monthly at 45.5. And then above there, the upper second coming right in line with the next monthly there at 47,100. And then above there, we can see that the upper third running right across the wick highs above the monthly bear market swing high at 48,240 to around $49,000. So if Bitcoin does break down from this range, as I've said many, many times, be aware that there might be front running coming in around that weekly at 39 to the monthly just below at 38.5. This area was tested as resistance. It has not been tested as support. So in the lower term timeframes, if we did see a breakdown towards that area, just watch yourself because there might be some front running that starts to happen. Now, it's not a guarantee, but it is something to look out for when you see a consolidation directly above a big support area that was prior resistance before the breakout and has not yet been tested. That also doesn't mean that it won't get tested. It's just in the lower term timeframes you want to be careful. The lower third is now right in between the monthly and weekly there, coming in at 38,750, with that weekly is just above it at 39, and then the monthly's at that 38.5, so it's splitting the difference there. Below there, and I would look for tests in and around the weeklies here at 37.7 to 36.2 down there. Not really relevant. I've said it a lot. Below that area is the $35,000 monthly. So nothing too crazy, nothing too different. Bitcoin is still in a range. And know that there's there's a lot of people in this space that have differing opinions. And, one of the things that we must keep in mind is that even though maybe other people that you're monitoring, you have your own analysis, obviously. If you're here, many of you already have looked at these charts and have come up with your theory as to what may occur from here. And or, you've gone around and you've looked at others that have floated what they believe is happening or occurring in the markets at the moment. And nobody's wrong. They're all just interpretations. And really what you have to focus on is setting criteria. If this area breaks, this is the next area to look for a potential as a potential zone of liquidity or as a target if you're, long or short, whatever it might be. And you have to build your trading plans around that, not financial advice, of course, but it also takes a little while for a price to develop and really get rolling in one direction or the other. And in this case, I've said this multiple times, the bands are pretty wide set here. We don't usually is the key word here, see trending moves occur, meaning like a range break that begins an aggressive daily trend in this case with bands this wide set. It's typical that when they're this wide set, you'll see, it's on the bottom side, it's getting rejected from falling through the lows, and to the top side, it's getting, rejected or turned into a deviation after the expansion here. We got the mean reversion back to the bottom side of the range, but if it heads right back there, it's likely to get rejected there from moving on through the highs, at least initially. And then we come back to it. What I do want to see is compression of the Bollinger Bands. We can see that BBWP is very high, meaning that this preserves the volatility within the Bollinger Bands and even a bit outside of them. Now, I will say that if we did see a lower second standard deviation close, we're probably going to go down and test this area. And if we see an upper second standard deviation close, then we're going to go and test the highs and probably a little bit higher. But I do think, at least initially, those moves into those zones would be short-lived, at least on the lower term timeframes. They probably get picked up, on the lows and sold into on the highs, and then we come back to it. I want to see some compression to expansion, and right now that is not the setup that is presenting itself. High volatility, wide set bands kind of spells a range with deviations right now. That could drastically change, the end of this week coming into next week. So keep all of those things in mind. Now, today, we're going to talk about a few different things. As I mentioned earlier in the stream here, we're going to talk about some of the ETF stuff, and you're going to need to give me a moment just to go through and grab some of the tweets. We're going to talk a little bit about volume as well, and how to gauge or use volume to help you gauge support, resistance, and continuation through support or resistance areas. And in this case, I wanted to call your attention to something that I think is fantastic and a very good thing that is needed, and that is this this post here. So this post is from James Seifert. It says the SEC has acknowledged the 19.4B request, requesting the ability to trade options on spot Bitcoin ETFs. Now, we do know that there was some covered call stuff that was just approved and is trading. There's going to be some shorts, but they're separate tickers. In this case, what this is this is actual options trading on the various indices. In this case, the big nine. I'm getting distracted here. Sorry. Hold on one second, guys. Yeah. Okay. Cool. Thank you. The big nine ETFs. There is the request here from NYSE, ARCA, NASDAQ. They're filing basically so that they can get options up and rolling. And this kind of rolls into the next big conversation about ETFs and how that relates to options and even grayscale in this case. Let's go ahead and pull another tweet here. Hold on one moment because this stuff's kind of all hitting today. We're going to take a look at the chart for outflows and inflows. Let me just get this up here. Oh boy, I'm going to have to scroll a little ways. Bear with me for just a moment. Okay. There's two pictures that I wanted to bring up here. There's one and two. All right. A lot is being made of the outflows from grayscale, and this is to be expected. So I wanted to talk a little bit about it. Let's get this particular chart up here, and this is tracking flows, assets, and volume. So assets on the books, the flows in and out, and then the volume that was put in for each day of ETFs trading. So it's been 5 days. We're coming into it's the end of the 5th day. We're post market now, but in this case, we have a outflow of let's see, where is GBTC? So we have a total outflow of 2.216 billion from GBTC, not counting today. This lags by a day or two depending on how fast they can get their data entered. Typically it's +1. So after close today, we'll see what the numbers look like on Monday. In this case, we have outflows of 2,216,500,000 is the total right now. And then we see that through the 5 trading days that have been on record so far, we can see that it's a net inflow to the ETFs in general of 1.115 billion. So yes, there is pressure being applied through the selling and movement of these redemptions, and a lot of people are making a big deal about all the on-chain movement. Well, I mean, that's to be expected. There's a few different ways you can look at this. Look, on-chain, you're probably going to see it first. You know, they're going to probably do it in the mornings prior to and or right at market open. It depends. You know, it's going to probably hit right at market open because all pre-market action will then dictate what's going on market open. They'll probably have most of those flows built up, and you might see on-chain starting to move sometime in the mornings directly after market open, once they kind of aggregate what was going on post-market and pre-market for the, you know, the post-market day before, pre-market of that day, and then start moving. I'm not really sure how they're structuring it. Doesn't really matter at the end of the day, but you can see the coins moving. And a lot of people are making a big deal about it. It's so much selling pressure. Oh my God, it's the ETFs are a flop and this and that. No, they're not. They're actually doing fantastic. Some of you may have seen some of the tweets. You know, Bitcoin is now ahead of silver. So I mean, we're seeing Bitcoin in its first 5-6 days of having live ETFs, spot ETFs already overtaking silver, and gold's not far behind. You know, gold has quite a bit. It's going to be a little bit to chase it down, but you know, it's probably going to happen by end of year at minimum. And if it happens faster than that, then you should be jumping up and down, because this is what we want to see. We want to see Bitcoin becoming the dominant asset. And yes, I get it. It's just an ETF wrapper. It's cash in, cash out. You're not really holding any Bitcoin. Well, you know, if you believe in Bitcoin, you should be holding it. And one of the things you got to understand about what's happening here, and I'm going to bring up another chart as well. One of the big things you got to understand about why, you know, if you really are a believer in Bitcoin, Bitcoin is going to infiltrate the financial system, and this is how it does it. It's going to infiltrate through ETFs and then infiltrate balance sheets via those ETFs, which gives participants in the ETFs vested interest in the preservation, the auditing, and the success of Bitcoin. Okay. This is also going to lead to a lot of development. Now, I alluded to this way before ETFs even launched, when they were first kind of filing and getting rejected and that kind of stuff. Is like, look, once it's in, once the ETFs are in, the corporate balance sheets are going to absorb some of these ETFs to their books as well. It's not quite happening yet. What you're seeing is a lot of 401k, IRA, mutual fund movement. And, you know, there is some corporate balance sheets that are shifting, and that's primarily what you're seeing shift from Grayscale Bitcoin Trust to these other players in the market. This other chart here, it might be a little tough to see. I would like to see if I can maybe, there we go. Now this particular chart here shows the actual flows on the 5th day. So it's got the total flows, the assets held, and then the volume and flows for the 5th day of trading. And these are confirmed numbers as far as I know. I have also seen these same numbers in other places that are not just Twitter. So I do believe these to be accurate. And what you can see is there was a total net outflow of 134 million. You know, right after the rejection at 43,200, that weekly, you know, we were seeing the outflows really start to pick up, mainly from Grayscale. And one of the big things that you got to understand is there is the premium of 125 basis point management fee, and almost all of the other ETFs are far lower. I think they're kind of maxing out at the 25 basis point area. So that's 100 basis point spread. And look, management fees and stuff like that, you could write them off depending on how you have structured your portfolio. What you're seeing right now is likely some tax harvesting and arbitrage opportunities going on. But the big thing is with ETFs versus Bitcoin itself, it's much easier to lend out shares than it is for you to lend out, and it's easier to lend out and borrow against ETF shares. There's a lot of built-in mechanisms for doing that. In many cases, right there in your portfolio dash with your broker, you can already do this in many cases just by using leverage. You're already leveraging against your held assets, and that would already include ETFs unless your broker has disallowed those until options are trading. And and realistically, it's this allows for a lot of stuff. Like there's a lot of good things that can come from this, but it is leverage, right? And in the options markets, what is happening is you're taking out you're borrowing shares in almost all cases. I doubt that many of you are redeeming or holding till close on any options if you are trading options, but you're borrowing shares to complete those options trades. And in this case, um, it's much more difficult. For instance, if I'm a treasurer on a corporate board, for us to hold cold storage Bitcoin directly and either borrow or lend against it. It's much easier for us to do this with an ETF wrapper. The mechanisms and the rails are already built in on the fiat side. And in this case, you can get some really cool stuff happening. Like, I don't want to get too deep into it, but there's some really cool stuff. There's also cities that are looking into this, and municipalities. I've alluded to this a long time ago, that even hold, physical on-site, well, not necessarily on-site, it's usually with a custodian, but hold Bitcoin directly. What they can do is they can actually take buy shares, and then either lend those out, which it makes it the ARB opportunity here from going from Grayscale to these other guys would offset, moving in many cases. That 100 basis points is a big deal, especially when loaning out shares, but also borrowing against. So in this case, you have either more to borrow against, or you can work out lower loan terms and stuff like that. So this is a very, very, very good thing. And I know that there's people, some laser-eyed folks in maxis of the world that just they despise that this is happening. But this is only, in my opinion, going to further the adoption of Bitcoin and further the vested interest in its success in the traditional market sphere, and therefore will be allowing it to further infiltrate the rails of the system. And when I say the system, I mean the financial system that then bleeds over into the entire economic system, or the energy output of nations. And that's where I kind of fall on that one. This is something that I am going to open up now to some questions, because I know that there was some specific questions that some of you had. And I'll be honest, if I try to articulate those questions without reading them, I'm going to fail miserably. So what I want to see is, oh my God, Torque, that is a mess of a chart. Holy shit. Dun, dun, dun. Anyway, looking back in chat, I'm trying to see what some of those questions were specifically about this, but I want to jump over into chat with you guys and see in the public chat what you might have, what kind of burning questions you might have in your mind here. I'm going to say hi to Bobby, No Name, Don. We got Cheryl here, Roka's here, and quite a few others, actually. If you'd like to come into the chat, come on into the YouTube chat. That's the one that I'm only one person, so that's the only one that I can really monitor. That's where the large portion of people hangs out. So if you're on x.com in the chat there, come on over to YouTube. It's Landy's Crypto Corner. It's the link in my profile. If you're on Twitch, it is also linked in my profile there, or you can search Landy's Crypto Corner on YouTube and you can see the live stream going right now. Sub it and jump into the chat. So let's see. There's a gap at 39 to 38 that didn't fill. Doesn't matter. Gaps don't have to be filled, but there is confluence there. If it does get there, then it would be considered a gap fill. Um, we often in bull markets tend to run away from gaps. It certainly doesn't look that way on the weekly, but it is not uncommon in the transition phase into a full-fledged bull market or a parabolic phase of a bull market to see gaps left behind. So, just keep that in the back of your mind. But yes, there is a gap there on CME. Let's see what else we got going on here. Bobby acknowledging that we haven't looked at CME in a while. Yes, sir. I can look at it if you like. It's the same thing that you guys are seeing. You guys know what you're doing. You guys know what you're doing. There is a nice gap here all the way down to the close here at 39,225, which is right at the weekly. So, there's plenty of confluence there. The gap just before it got filled, but it was right away. Could this come down and fill? Absolutely. And I would welcome it. It's right into an area of support. Even if it started to dig in and fill out this area down to that monthly at $35,000, it would look great in my opinion. Okay, so Bobby says, thank you for explaining this stuff. You basically explained it already. I wanted to have you explain what the ETF wrapper actually implies. So, yeah, in terms of what's happening with Grayscale, the big thing is like crypto and even financial guys, we get so wrapped up in this. Oh my God, it's so much selling pressure, and they've got 26.5 billion unlock, and they're going to move coins, and it's only at 2 billion. And yeah, I get it, but that doesn't mean you throw out what you're seeing on your chart. And it also is not necessarily going to dictate what happens in these markets. Look, the flows on Bitcoin from the ETF side of things are minuscule when taken in the totality of a typical trading day in Bitcoin anyway. We're not there yet, and it's already topping things like silver. So the flows into you've got a large player in the game that needs. I don't want to see be a large player in the game. We've got Grayscale. They hold the majority of the Bitcoin in this space. They have the total assets on their books. 23.124 billion. Look, people aren't going to exit Grayscale completely. That's kind of a silly notion. They wouldn't have gone over to a spot ETF if they felt like this is going to completely collapse Grayscale. In fact, what is more likely going to happen is that we have a situation where there's a 100 basis point spread between them and the other players in the market. So they're not competitive. You're going to get some people that get scared and they're like, I can't, I'm not willing to go through. Nobody's really saying this. I'm not willing to go through and, take that 100 points and use that as a write-off because it's not worth it to me. I'm going to cash out now because I have another way to offset the taxes and or tax harvest. Maybe they had bought in higher already. They were locked in, and now they're able to cash out, go to, preserve some cash on the side, maybe get a little bit in smaller buys into some of the other players in the market, maybe go buy some physical Bitcoin as it heads down. These aren't people that are abandoning Bitcoin or the ecosystem. These are players in this game that are looking for ways in which they can mitigate some of the larger tax bills that are coming in this year and possibly offset some of that, especially because these are mostly bigger players, right? There is retail here, but retail, honestly, if you're holding Grayscale and they converted, from the time in which you were holding it before the conversion, that 100 basis point spread, that 125, you should be getting with your tax professional and claiming it against gains, and it's a wash at that point. It doesn't even matter. And if you are getting out, then you're probably tax harvesting, because if you're getting out right now, just prior to the halving, it's a little silly because you could easily claim against with the fees. You know, yes, they're built into the ETF. You've already prepaid them, but you can get some back at least to counter some of your other parts of your portfolio. And every little bit helps, right? But you need to get a tax professional if you're just a retail trader and you're doing this. It doesn't make sense to cash out and go with another one because you have an implied tax hit now. So realistically, what's happening is a lot of this is likely bigger players in the market, whales, and in this case, you're probably looking at corporate balance sheets because it makes sense. Last year was a pretty good year for a lot of places, even though, some ended up, a little cash negative at the end of the year, even though their stocks are going up. Coming into this year, you've got the closeout in the first few quarters of this year. You can adjust around and you can save that 100 basis points. If you can save that and you can go and buy and then lend out, buy or borrow against, then you're actually in a really good position, especially if you're buying in and borrowing against, so you have cash free. So, it gives you more to borrow from, and in many cases, more negotiation on the lending side of things. So that's really this is exciting stuff because it also means that it's not just one big player. Now we've got 10 total that it has to be split between, right? So we've got we have a little bit of decentralization, even though granted they're all being held custody in generally the same spot, which is at Coinbase. But it's not that big of a deal that Grayscale is seeing this outflow. A lot is being made of it that I think is a little bit over the top, which is fine. That's okay. Is it going to cause a downtrend or a downtick? Absolutely. I mean, we've already seen it. We have negative flows from day 5, which was yesterday, and we saw the breakdown to the lows. I mean, that's typical, but it also isn't anything that we didn't see ahead of time on the charts. So let's go ahead. I mean, let's go back to, we had a lower high. We had bearish divergence building before the highs were even put in, before the ETFs even launched. So this was telling you that at minimum it was in for some mean reversion back to the range, possibly range lows, and maybe even a range breakdown. That all of that was already in the cards. And you go back to something like the weekly. This is an uptrend on the weekly that hadn't even put in a high on a close. We saw some swing highs, but we haven't even seen the high on a close. We will get a high on a close now because of the opens. If the weekly closes below, it would actually, you could take this one here at 43,740. A close there is a closing high with a swing high above it. So we've got the swing high already confirmed. And then we get a closing high. I would kind of want to see it break down below this open at 42, which it's been testing today. And, and especially a breakdown below 40K. And then we're filling that gap, right? We're filling that CME gap. We're coming back probably somewhere around wherever the basis is. Maybe even down all the way down to the lower first. We don't know, but it's already been painted on our charts. It's already been in there. And this is nothing that is out of the ordinary. It's nothing that is a direct result of the ETFs. And look, they're all dumping on us, and we were supposed to dump on them. Like, no. All the dumping talk is just people obsessed with getting shit on. And in this case, it's due for a pullback. This has been a big ass move up off 26.5. So, a little bit of cool down, a little bit of mean reversion, nice pullback. Great. You should be welcoming it. All right. Let's get into a good question that I had from Don. And that was about volume. Hold on. Give me a second here. All right. Let's go take a look at volume. And the primary question from him was like, I'm a little confused about volume. Can you please re-explain it so I get it? And I'm happy to. Look, we track this as an uptrend, and I've still not created a downtrending chart because we have not seen any kind of a weekly reversal, and the daily still hanging out in the range. If the daily does begin to break down, then we start making our volume-based downtrend chart. But if you want to do it another way, there is another way. We can see the high volume wicks here, right? So you see the spikes in volume. And by the way, if you are doing this, do it on spot, not derivatives. I would suggest that you stick with spot when you're doing this kind of volume analysis, because spot is really going to be the driver. It's either going to be the counter signal or it is going to be the confirmation signal for what you're seeing on derivatives. So let's just take the local range here. We've got a few areas of high volume. We've got this candle here, which is this nice wick down. This wick down came in at a low of, we're going to have to zoom in. This wick down was at 40,600 or so, right? 40,500. So that's this guy here. We can mark it. Okay. Now, we've got another bit of high volume here. This was also on a low wick. Now, this wick here did set a 15-minute low. You'll see that price came down and retested it. Did not pass it on a close, though. And this is, I believe, 47.7. And we have a nice high volume high up here. So we can mark that. But what about all these spikes of volume in between? Well, this one here is a nice wick low that was defining this range here. We saw close open right on it, and then a move back up on higher volume here. But it, it did not put in a high volume high. The higher volume was actually into this high volume wick low area when it was spiking back down. So, you do have to use judgment when evaluating these. We then saw another bit of high volume coming in here. After this big high volume candle right here was broken down, you saw a bunch of volume coming in trying to hold price up. Also liquidations and stop losses getting hit, all that stuff. We saw a nice bit of high volume come in here at around that 41,400. We can mark that if we want. It is in between, so it's still above that 40,000, 650 wick low over here, which, by the way, prior to that, there was another high volume wick low that was coming in just around the lows here at 40,300. So there was this guy over here. You see that big high volume bar there. And you might be thinking to yourself, well, wait. And you see, by the way, this bit of higher volume came in right around that high volume bar. Of course, we also saw a nice high volume bar. There's historical higher volume bars over here as well. But in this case, this is probably good for now to illustrate my point. And you might be thinking to yourself, well, this bar over here is not nearly as high volume as this bar. Should I be assigning any importance to these areas? No, you should mark them. And all you do is you look to say, okay, we're up here at the highs. We saw this nice high volume bar come in. We saw a close open right on it, and then a pop up to new highs. Nice high volume high set. Once the 3 candle and the swing are in, you mark it. And then you look back to, well, where are things headed? And let's zoom in here. We'll get rid of this because this is just going to become cumbersome. And when looking at this price action, you can see that we had the nice high volume bar, held up the lows, went on to new highs, put in high volume reversal. The swing was in on the 3rd candle. The closing high was in on the 4th candle over here. Market. That was a nice high volume high. Where is your next big area of interest? Well, you could take the highs on the way down, right? And then work your way high to low if you're using a low time frame preference. But more importantly, the big line that we have marked there is the 47.7. And I want to show you what happened when price got there. Well, price got there on this candle right here that wicked right into it. What happened on that same candle? We saw high volume starting to come in. Break down, more volume. Keep breaking down, more and more volume until it bounced. It bounced up, And then it put in a higher volume rejection right here. So you're welcome to mark that one as well, because it already broke down from the 47.7 area. So that high volume rejection came in after breaking down. So it tried to test up further, got a nice high volume rejection right here. And then what did it do? It came right down. Now, it still hadn't gotten to these levels yet at 40,650 and 40,300 respectively, but it did put in a nice bit of high volume on this wick and painted a reversal on a close. So we had the swing reversal on the third candle, closing reversal on the, or closing swing low on the third candle when it closed above the second candle's wick high. Closing low was set once it closed above the down candle down here with the high volume. Once it closed above, that was your closing low set there. Mark it, and then you've got this nice well-defined range over here. And you can see when it starts to approach, the top side of the range and it's pushing up, it's got higher volume, hits this low side and then tries to push up again, gets rejected, but it's still all in the context of a range. Okay. Once we start getting into the 41,400 area, which, just to remind you, 41,400 was this volume here, but you're probably thinking to yourself like, it was pales in comparison to what volume level it broke down from to get here. It doesn't matter. We only use that as a, hey, if this area breaks down, we're looking at continuation. That's all. And even then, you should be using like, hey, there's a consolidation over here on the 4 hour. This spiked the $44,000 order block, yada, 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 whatever you want to do. It's a trend line there. There's a fib number there. There's whatever you want, right? It's you do need to use confluence with other indicators and or other styles of analysis. But we see that once the low over here gets taken out, it gets there. And what can we observe here? Well, we observe as it's getting to that 41,444, we see volume starting to build on the way down here. It spikes it. We see some decent volume there, starts to move through it, and then it moves down to that 40,650 level. We see a nice big high volume rejection, try to push it through that level. It fails to do so. It begins to consolidate, comes back up and retests what? That high volume low that we had marked at 41,444. It then rejects in and around that area. It now falls through the 40,650. So we're looking where? Well, we look to the next big high volume area of interest, and that is that 40,300. And I want you to note, I didn't plan this. You're going to see this work out like this almost all the time. We see that we get a 3-candle structure that did not pass that $40,300 low that we had marked. Now, there is also a 40,150 low here on Coinbase as well. But we get a nice 3-candle reversal. We get the swing low. No, it was actually the 4th candle that confirmed both the swing low and the closing low, and it regained 40,650. Made its way right back up to 41,444. Initial rejection, front run of that area. This was prior resistance. Moves through it. And then what happens? Well, puts in a little bit of a high here, a swing high, and then a 3-candle high. As that 3-candle high was confirmed on the 4th candle here, it becomes a 4-candle closing high. And it confirmed the swing high on the close below this open here at 41,768. This candle wicked right down into that 41,444 area, and it found what? Found liquidity. So it got bought back up, and now it's consolidating above that 41,444 zone. So now, of course, this has to be taken in conjunction with all the other confluences that you have, trend lines, support and resistance areas on higher term time frames, volatility, what is the spread on the bands and BBWP within that, and of course, momentum. So I hope that helps. You're going to have to let me know if that helped explain how to use volume. Go ahead and let me know in here. I'm going to read through chat real quick. So we've got Bobby actually asked about it. in addition, because him and I believe Don were talking about it. Shell says, yep, big boys. We're with the big boys. Also, this is huge just for making Bitcoin more common to everyone. Yes, it's an easy way for people to get acclimated to Bitcoin. Bitcoin has to get above 54K for real profit. I have diamond hands, I guess. Oh, well, I guess if your average entry is 54K, you should be or should have been at least trying to bring that down. Hopefully you did. But maybe you mean for like breakout long term. Hi, Sam. How you doing? Not late, just classy. Hi. Hi, Jedi. You might want to roll back the combo and listen to the early part of the stream, Jedi. Bobby enjoyed that breakdown there. Let's see. You did miss a bit of the meaty bit, but not anything too crazy. A nice little revisit of volume analysis. In this case, just picking out important areas of volume, not the trending volume that we were doing on the highs. But to revisit that, I'm going to go over here. Sorry for the cough in your ears. We're going to get rid of all that. And we'll come down, and I had this mapped out to 417 prior. And I want you to look at how freaking clean this is. This was the prior map that we've been building out the entire time. I still have the map all the way up to the current highs. I did build it out, but it's part of, I just haven't put it in the folder yet. But I want you to see how the, price played around here. This spike down on high volume was right into what? The monthly at 45.5. It deviated down a little bit further into a close open at 44.4, 44.5 area. Regained these areas, tested as support around 45 to 45.5, and then made new highs. And when it started to move through these areas on that volume map that we created a while back, which is only tracking the closing and swing highs, we can see that it moved down level by level. It tried to hold certain levels and then lost it, loses this level, retests right there at 44,039, which was a prior wick high on volume. Moves down into some of these other areas, which is a thick area of volume from the way up that was putting in highs that Bitcoin subsequently broke out from. And then it's coming down. You'll see that it'll just smack every single level every single time, find support in some of these areas, so on and so forth. So I still have this larger volume map, but it gets very complex. You can see how it's playing around with prior highs as it is, and it's striking them and testing them and then retesting and to the top side and then falling further and hitting, in this case, this is white. It's a wick there at 40,222. We just had this marked from a higher volume low, but you can see that it's also a higher volume high area that we already had noted there. What I just showed you is just a simple way of doing volume analysis. This particular way of volume analysis, this was just tracking the highs for continuation. So all of the highest volume swing highs on the way up after Bitcoin puts in the high. We look at the volume, take the swing high or the wick high, and the close. White are where the swing highs there, closes are in yellow. So you can see how it's just playing back to prior areas that were highs that then it moved through in this case. Right now, I just have a little bit of a simple range pointed out here, which is, the close opens here. Uh-oh. Did I goof something up? I might have goofed something up. Hold on. So just for some shorter term time frame analysis stuff, we have the closing range low, closing wick low, came right into that zone. Prior, we had the close and the wick low of this higher volume move down after it broke down from this area here and this area up here. So I have my own little zone that I picked out to keep an eye on volume in this case. But Don, you're going to have to jump in and let me know if that makes sense for you. If you're still in chat, if not after the fact, let me know. All right, so yeah, hope that makes sense. Let me go ahead and take a look at chat yet again here. All right, 12 and 24-hour Stoke pivot bracketing the local range from high, from low to high. Yes, it is 40,800 to whatever the 41.7 or 800. It's like $1,000 range between the two pivots. Yeah. So now the big thing that I will, let you know is if we do see the weekly close below the, if we see the weekly closing below the upper first, that does make, all of the supports playable. Your 39K weekly, 38.5 monthly, 37.7 weekly, 36.2 weekly, 35K monthly, 34.750 weekly, down to the basis here. That's kind of the zone that is available. Obviously, it can go much further to the downside as well, but that's the primary zone of interest. And the basis is currently at 35.5, likely to move into that weekly at 36.2. In terms of support and resistance, that's this zone down here. So below a close below the lower first would make that zone a viable area to look, but you got to look at support and resistance first, and you got to see a range breakdown. Like that's the primary criteria. And then if that area breaks down from the basis to the lower first is the big zone to be looking at. As I mentioned, this is likely to update to somewhere around $30,000, and that's where we have a couple of weeklies anyway. We've got 30,600 here, 30,300 over here on the close opens. And, and you can take to the wick highs there at 31.8. It's a traditional support resistance play at that point in terms of areas of interest to the downside. Bitcoin could very easily lose the upper first on the weekly and then just regain it. So the criteria is, either close above the upper first this week at 42,100 or so, and that makes the upper second a viable target again around the highs at $49,000 to $50,000, even all the way up on spikes to the upper third up there, which is at the mid $50,000 region at $55,000. So I would say somewhere around the mid to low 50s if it does, happen to get above the upper second and take out the wick high at 49K. And then you just look to the next week, right? So as long as the lows hold, this open over here at 40K holds, if it regains the upper first, takes out this wick high, you've got a swing to the downside, so a swing low. If it puts in, any kind of a close on the weekly back above, $44,000, 43,960. Well, here on Coinbase, it's 43,954.52. So any closes on the weekly above 43,950 and the highs are back in play and higher, it would be a swing low and a closing low set, right? Doesn't mean that it's going to go and close above the highs, but it's definitely, it'd be indicative of Bitcoin testing the highs and higher. Yet again, even if it's just on a close to test around those areas, but if it closed above, it would set 3-candle low, at least from where it is right now. If it just paints green, you still need to take that open at the highs. So basically 44K. The weekly is pivoted at $46,000, and it's in the overbought zone, but it's, just kind of peeking down towards the edge of it. And it's, we're likely to see this, get a bullish reset, whether it's here or lower on the Stoke chart. We're likely to see it, more likely to see it than not. Something to be aware of coming into the end of the month is a Stoke turn on the monthly, but then you still have to look at that probably getting a bullish reset. 2-month is pointed up above 26,500, which is the higher low on the monthly and 2-month areas. And the quarterly is aggressively angled to the upside above 25,800. So, it's pressure up on those longer term time frames, and they will typically lead to nice bullish resets of momentum, and or sharp spikes to the downside that reset the pivots on some of those time frames below it. So in this case, it would be quarterly into the 2 month, into the monthly, weeklies, and so on and so forth. The 2-day chart, yeah, sure, we can look at it. Spiked the lower second, like pinned it directly, 40,300 basically. Low is coming in right in there. We just looked at that on the volume charts. It swung that 40,300 high volume area. Why do I use the 15-minute? Because the 15-minute is going to show you something very different than if you're looking at a 12-hour. So that's a good question. If you look at the 12-hour, the most important wick low is here at 41,444, right? Prior to that, it's the wick low over here that's been swung. So, I mean, it's going to work out generally the same, but you can get more granularity when looking at the volume bars, on the 15-minute, because you can see the exact areas of interest that might not reflect higher volume in that full 12-hour candle or 4-hour candle or hourly candle. But it was like, if that volume is significantly higher than any volume around it for the 15-minute, it's likely going to be one of the more interesting areas to watch for either, support or resistance, or for continuation if it's broken through. The next big high volume of, prior to that on a low is this area right here at the actual low. And if you take this down to the 15-minute, well, go figure. This is aggregate volume for this big area that we just talked about. Prior to that, nice big volume bar, one of the biggest outside of the highs there. And then the 40,150 is another big high volume bar. Is it as big as these other bars in these areas? No. Is it significant? Yes. Should you mark it? Yes. Main reason why is it's still a high volume zone. It's actually slightly above there though on the 15-minute. If you look here, this is the 40,300 swing that we talked about on the 15-minute, right? That's this guy right here. It's higher volume than the actual higher volume low. So because this was tested, people are planning on getting in here, and they did. So when you look at that as compared to where we are now, and the reason why I prefer the 15-minute for this is because if we scroll all the way over, look at which area was swung. No close below, which means that it didn't test the actual wick low at 40,150, which if it did, then you're looking for, is it going to bounce, deviate, regain it, and then head back up, or does it, reject and then get continuation? And in this case, it swung that actual high volume candle where the wick lows might have come in at 40,150, but the real area to pay attention to was this 40,300 even. If that makes sense. I hope that clears that up. That's why I go down. You can mark it on like the 12-hour or daily and then go down to the 15-minute, refine it to really find those high volume candles on the highs and lows. And that will really assist in your evaluation of these areas for support, resistance, and continuation, either through the support or resistance in said direction. JR says it swung the lows on CME. That's great. We can look at that. I suspect the lows didn't go quite as low spot on CME at the time anyway. Yeah, look at that. Nice little swing, nice little sweep of the lows on CME. But Landy, look at that high volume up there. That's a top. Yeah, no shit. It was a top as soon as the candle of the 12th came in. But Landy, look at the high volume on the weekly. It's over. We're all going to die. I mean, Bitcoin's going to die. Well, guess what? Doesn't mean shit in the context of the range. This is just the first damn high. And then boom, down. And you can see basis is already coming in and likely to be substantially. It's actually it's above the sideways and up consolidation along the upper second standard deviation on the weekly here. Beautiful, beautiful, beautiful. What you're starting to see is BBWP coming down as well. And that's what you want to see. Let's go ahead and look at BBWP. Oh, I love it. I love it. We're getting mean reversion. We're starting to see the bands pinch together. This is what you want to see. Because from this, what we'll see emerge is the next major move on the weekly. It's got time. This is going to take a little while unless it spikes back up. And if it does spike back up, how will that occur? The closest area that you would see BBWP move back up, this is CME, of course, beyond closes back above the upper first and upper second, likely to result in a bit of a sell-off in those areas as it would be against the volatility metrics. The only other way that you're going to see that is they move down through the basis towards the lower first and lower second. You'll see BBWP rise again. When looking at spot price, you could see the same kind of thing here, a little bit ahead of CME in this case, but nice BBWP cool down, mean reversion. The only way the BBWP itself is it's under the moving average. So the only way you're going to see it move back up is right now, regain the upper first, move towards the upper second, get a close above it, and or move through it. You'll see BBWP pick back up. Highly doubtful that it's going to turn the moving average unless it hangs out above there for a couple closes. As right now, it would have to go from the 15 level all the way to the 47 level. The only other way you're going to see BBWP head up from here is if it moves through the basis band towards the lower first, lower second. So right now, this is a bullish move back down to consolidate, find support, that kind of stuff. So it's still, the outlook is still bullish. Could it change? Absolutely. How would it change? If we see Bollinger Bands compress, we see Bitcoin around the basis, and then we start to see expansion below the lower first, and especially any kind of closes that get expansion from that lower second. As it stands right now, they're a little too wide set. It's not a compression. It's not tightly compressed yet. You want to see compression into a range like what we saw over here, and then the lower first, lower second if you're bearish. Right now, this would all be seen as supports to the downside. It's all mean reversion back to support. Yep. Yeah. Does that mean that it won't take out the highs? No, it could still take out the highs even during a compressive phase. What I'm saying is because the bands are so spread out and volatility is so far away from the moving average, that if we did see a move back to the highs, it's probably going to be, it's got to either result in it hanging out for a little while and getting consolidation, or moving through, and then you're probably going to see violent rejections as it begins to get up there and above it, so on and so forth. But you would see BBWP pick back up, but that's all in the context of, we have the expansion of the Bollinger Bands and the expansion of price action. I would still, for a full sustained move or another leg, let's say, I'd want to see some compression, whether that's sideways and up compression around the, basis upper first or upper first to upper second zone with deviations below the basis are just fine. And then re-expansion above the upper second, take out the wick high and get a move really rolling. To the other side, that would look like, a compressive phase like what we saw over here, and then taking out the lower second, lower third while also breaking through the supports. Then you're looking for a sustained leg down. Everything right now is pointing to, even at worst, it would be likely to get picked up. More likely than not. if I was going to place a likelihood percentage, yeah, you guys can hear me in real time. What would I be betting? What would I be betting? I would say it's like an 8 from its current position right now in a crash scenario. I think that it's all opportunity, not financial advice. And we are not seeing a crash. We're seeing a structured drawdown on the daily back to support within the local range currently. Yeah. Yeah, just playing between the lower first, lower second. I mean, this is why I tell you guys and gals that, closes below the lower first, open up the lower second, closes below there, kick off expansion of the Bollinger Bands. But it also has to break through support on a close. So you could see a giant wick all the way down, but if it closes back above the wick low, well, that was wherever it goes is opportunity, quite frankly, in the lower term timeframes. It doesn't mean that it wouldn't go and fill out the wick or continue to, crash through, but it would need to close below the lower second and break the range wick lows. From there, to the upside, same deal. It would have to close above the upper second, upper third in this case, and take out the wick high, which is from its current position a little unlikely. Yeah. It's all about volatility right now. There's people looking for like another leg from here, and I think sure it could easily go and tag the highs and higher. But if you're looking for a full-on sustained leg to the upside, probably going to be waiting a little while. Maybe a nice slow markup that then gets compression to a nice big pop-up, but yeah, I'm not looking for it to just spike it and go right from here. I'm not looking for God candles, no. And I'm not looking for the devil's dildo candles either. Yeah, and if it did occur, yeah, I'd be looking at that as being a very good opportunity. I mean, we're so close to the halving that if you're not seeing this as opportunity and you're getting caught up in the bearish narrative of the grayscale stuff, then you're missing you're missing out. You're missing the point. You're missing the bigger picture in that case. Will I be showing options? Yeah, not options trades. No, I will be walking you through the Greeks. Yes, I'm gonna give you the primer on the Greeks soon. I'm getting that stuff rolling and trying to get my thoughts together so that I can describe what options are first. What option contracts are, what a call is, what a put is, how you can sell, how you can buy or sell a call or a put, and how that is actually directional. It's just a matter of who's collecting premium versus who's paying premium. The fact that when you are doing this, you are borrowing shares to do so, especially if you're paying premium. If you are not, you are still technically, if you don't own it, if you're taking options on it and you are receiving premium, you're technically borrowing the underlying asset without borrowing. It's a whole big thing. It's not covered basically. It's not a covered call in that case, or a covered option trade, let's just say generally. We're going to get into the Greeks, so how to read some of the metrics that help define the price of the options and kind of give you hints as to where things are headed, where there's opportunity in those options contracts. And then we'll get into some basics of describing different strategies. I will give you, one of my favorite strategies is a range bracket strategy, and you let one side go. A variation of a butterfly, maybe an iron butterfly, and then you let one side go. Whenever a range breaks, that kind of thing. So basically, you're playing the range. You can even readjust your options positions within that range as it either widens or contracts. And then when one side breaks out on volatility expansion, then you let the counter side go, so the losing side go, and you ride that winning side for big gains. But yeah, that's going to be my gift to you in terms of how to think about things. And you can relate it all back to, longing and shorting in general. And I will try to simplify it down so that you will have to go and do your own research. You're going to have to really study up on options. You're going to have to understand, what your broker offers and what levels of account size you need to have to perform certain options trades as well, because there is often gates that prevent you from trading specific types of options plays, because it does raise your risk profile. So, we'll talk a little bit about, brokerage account leverage and how, it's all built on leverage anyway. Like you have your money there and you get a set amount of leverage, and typically you have to have a certain amount of money to even have access to leverage. No, you are not going to see crazy amounts of leverage like you see on these Wild West exchanges, but there is leverage built into those markets, but it's all based on the lending or borrowing of the underlying asset or indice. In this case, it would be the ETF. That's what is being put forth for approval today, is what we saw. That is this over here. This is the 19B4s rather, that were filed for options, so that the underlying security can be lent or borrowed against on the options side of things. Primarily, they filed that stuff now because I'm assuming, a lot of these players wanted to get to around that billion number. They wanted the big guys to get to the billion number over like 500 million, and then trickle down at least for a couple of them. And then you've got good liquidity. You've got enough holders that can lend out. Yeah, it's pretty cool. Okay, we're going to start the music here. While I continue to read through. There's a lot of stuff going on outside. There's some construction going on the side of my property here, so I apologize if you hear that. Hopefully the music will cover some of that background noise going on. Any other questions in regards to that stuff? Whether it be the analysis of what's going on in Bitcoin, the ETF side of things, the volume side of things, let me know. Can I pull a fib for the current move? Sure. Yeah. You can do it either way. I mean, we could pull it from the high to the current low if you like for this current move down, this downtrending structure. You can see that the 382 is cutting right across the high there, the wick high. 618's right there at the upper first at 45.5. So yeah, there's confluence there. But that's just the current, there's no low set on this current side. Just lower term time frame swings. You can pull it the other way too. If you wanted to see that, which is where, breakdown below, you would want to take the wick low, but for the current move, breakdown below here, you get $38,000 cutting right across the highs here at the 1272. 1414 is coming right in at that low that we just talked about earlier in the stream, and that's at 37. 1618 is, guess where, 35.5. That's also where the weekly basis band is, so it's right there at this big consolidation structure here. So yeah, so there's a lot of confluence in those areas. If you take it from the high to the low of the range, you're going to get even closer. See how this comes in right across these wicks prior to the breakout, and that's at $38,000 even. You got the 1414 catching the higher low there prior to the breakout. This one's really clean, by the way. and that's coming in at 36,939. Wicked into it, swung it a little bit, and then you got the 1618 coming right into this nice higher low structure that had a higher high, did not pass the wick high there on a close. Another higher low structure that front ran it, and that's at 35 453. And then if you were to bring this over to the weekly for Bollinger Band purposes, what you get is, oh hey, there she blows, it be the basis band. So yeah, there's confluence across all these areas. 272s down here at the $31,000 level. Yeah, well, you could pull it either way. If it bounced aggressively, okay, I can show you that. So yeah, if it's not the way that I would do this, but if it did bounce aggressively and you take out the highs, you've got 51,800 up here at the 1272 to 53,300, and then of course you've got the 1618 at 55.5, which I will remind you is the upper third standard deviation. In fact, if you take the wick low, it's 55,600, but 55.5 to 55.6. It's the upper third on the weekly. Yeah. You're welcome. Absolutely. Glad I could help. Confluence, that's what you're looking for across the various tools that you have at your disposal on your chart. You're looking for confluence in major areas of interest. And yes, the fibs will almost always come in line with an existing major area of interest or define a major area of interest on blue sky breakouts. Bobby says, I heard fibs. Now you got my attention. Well, I'm glad. I know you might have fallen asleep there for a minute. It is kind of late for you guys over there, huh? Yeah. What are my thoughts on the traditional markets? I'm going to just revisit them on Monday. My thoughts have not changed since Wednesday's live stream. We are seeing traditional markets. I told you if Dow went back to the highs, it was going to break them and go higher towards the upper second. We're seeing exactly that, or saw exactly that today. What was the wick? We were looking around 37,900 to 38K. Below there, I'm looking for this to break it and continue up. Stoke looks like it's going to turn on open next week. What was the close? The close was 37,863. So yeah, we'll get an initial cross back to the upside. It might even complete that cross on Dow. So back to the highs and higher. So new all-time highs. NASDAQ, nice big green candle, new all-time highs on volatility expansion. By the way, we're seeing volatility expansion. Not there yet, but it's baking on Dow. NASDAQ, it's getting volatility expansion. We have hit our 17,000 target and spiked into the 17.2 to 3 target that we had. Next area is going to be 17.5, which is above the upper third right now. Nice aggressive move up on expansion here of BBWP. Continuation above 17,100. We're looking for continuation. So 17.5 is going to be big. Even numbers are going to be big. 17.5 to 8, and then 18 is probably next after. We have finally hit our target to the upside, as I had mentioned. Trade above the upper first. We're looking to take out the local highs towards 480. Nice volatility expansion. 480 is the pivot. Likely to head down, by the way, because this did put in a nice low. So we're probably going to see that pivot head down. As long as it's above the upper second, we're looking 485 to 490 next. So it did not hit. It hit our 480 target. And like I said, take it 5 points at a time. 480 to 485. It literally split the difference at like 482.72. Like, can't get much better than that. Next area is going to be 485 to 490, 495 to 500, and then I think probably looking somewhere around You could pull a fib real quick, and you can see this is actually what I would want to do is just use the range. So 487 is the 1272, 490 is going to be the 1414, 1618 is 493. To the 1786, I take these in zones. I like the 1786, 1618 to 1786 as a zone. That's 1786 is right at 495. To the 2 spot at 500. If we start going further up, I don't have a bunch of fibs on here much further than that, but then we're looking in 505 or so in between the 272 and 2414. So it looks good, and it's expansion as well, so beautiful. But we're going to follow up on Monday with traditional markets. I'm not going to dive too deep into it, but we'll refine some of the breakout targets from there. Looks good though. Looks very good. You could just take this move. Yes. Good point. So Jimmy says you could also take the higher low move on the fib. And yes, you absolutely could. So from here, you'd say 486 to 488. Like I said, basically take it 5 points at a time. Above 485, we're looking 485 to 490. 1618 is right there at 490. Oh, that's why you said it, because it's confluence. So you're going to find this confluence everywhere. 490 is the 1618. It is blue here. I do need to recolor it on these fib extensions, but yeah, beautiful breakouts. All-time highs. I told you that SPY was going to get an all-time high. It wasn't. You're not going to leave SPY out. Come on, you're not going to have Dow playing around its all-time high and consolidating and shit, and NASDAQ breaking out and then coming back down to support and then re-expanding without SPY hitting. No, it's going to follow. Yeah. And when people start taking profits, what do you think they're going to put it into? Huh. I wonder where those profits are going to roll. I don't know. You guys tell me. There's some kind of new products that just launched. I mean, it's a bit of a mystery to me, to be quite honest. Dixie, yeah, it's threatening to put in a swing high, but it's threatening, right now it's threatening to, it's also going to paint as a high here. So you're going to see this paint on RSI as a closing high, and it technically is. I mean, you've got, the close below the 3 candle structure, but realistically the way this candle from the 16th painted, the upper first at 103 to the open there at 102 basically have a freaking dollar range. Looks fine. I'd beware if it consolidates, but markets are ripping, so it's possible that it heads down to that area, drops 102 and heads back to, I'm lying. That open is at 102.74. I was looking at the wrong thing. So 103 to 102.74. Below there, then we start looking at 102, and a half to 102.20, 30 area around the basis. But again, I'm going to look at this on Monday more extensively. I know you can't help yourself but keep asking about it. I know, I get it. No worries, bud. I mean, that's the stuff you're dealing with day to day, so. Yep. Oh, God, Bobby. Harry Potter, Shiba Inu, Obama coin. No, I'm good. Isn't that like the Harry Potter, Sonic Inu, whatever? The real Bitcoin, as everybody likes to say. Bitcoin. Let's do the $sign in there. Yeah. I think I probably have to spell it out, huh? Yeah, this is your This is your $ Bitcoin shitcoin. Harry Potter Obama Sonic Inu. Yep. It's to be fair, it's in a higher level consolidation, and after its initial sell-off, man, it actually has been consolidating quite well for a garbage coin. I mean, trading at 6 cents from down here is no joke. I mean, somebody got out even. Luckily at 4 cents after the listing here on Uniswap. Chat is massively lagging. Oh, sorry. Hey man, I gotta tell you on this particular coin, it's rare that you see a garbage coin like this where people have the opportunity to get out after the listing. And that it's in a sideways consolidation. To be quite honest, I want to see, oh shit, the daily's going to turn at 5 cents, 5.8 cents. And it's going to turn back up. Oh God. Crypto sucks, man. But it's amazing at the same time. And look, just so you all know, we must keep in mind that traditional markets are just as bad, if not worse. All right. So if you think crypto is bad, go ahead and really get involved in traditional markets. It's in many cases far, far worse. Stellar, man. Let's go ahead and take a look at it, actually, because I saw it pop up in chat. I didn't see who said it, but I actually, man, the Bitcoin pairing, it's not going to show it's just going to show the shit charts here. Let's go to, oh boy, that's a big downtrend. I mean, this is indicative of most charts against Bitcoin, but oh dear. Oh dear. That's that hurts. That hurts, XLM. That hurts. All the holders, keep holding. Don't worry, the low's not in. Oh, XMR. Well, Stellar looks awful. I misread. Thank you, Bubby. You want the privacy coin, which is Monero. Do I use Monero? Jimmy asked me if I use Monero. I have no idea what you're talking about, Jimmy. I would never use a coin that would obfuscate where your money is being sent and or who is sending you money. That would be a little suspect, sir. I am all for open ledger. Bitcoin only. Bitcoin only when everyone's minting absolute trash on ordinals. When the fees are 400 sats just to maybe get a transaction through. Which chart would you prefer I use there, Bobby? You want me to just use Binance? Oh, look at that. It's a weekly downtrend. Oh, it's a weekly low break, but it did recover. Could it become a deviation? Could we see it pull a US Dixie dollar? I mean, to be frank, this is, I'm Landy, but to be frank for a moment, this not a bad setup for a bounce, although may have seen it bounce already. Above 0.00329 Satoshis, or cents, if you want to read it as cents. it's not. It's Satoshis because it's measured in Bitcoin. But above 0.0041, and this thing's going to go retest the lows in the basis around 0.0046 to, I'd give it a range, almost even into the upper first at 0.00519 to the, 5364. Yeah, it if you're a counter trend trader, this is probably where you were getting in, as around these lows as it swung the lows and then regained it. So I think that trade might have been already Denzo's. I mean, weekly could turn, to be fair. But generally when you're seeing altcoins gaining on Bitcoin is either consolidating or in some cases coming down, and the alts are just holding before a bigger dump. In this case, it's been holding its value relative to Bitcoin coming down, and if Bitcoin dumps through, this is gonna nuke through its support on the weekly. Upper first, after an expansion breakdown, this is the bearish retest area. So it's testing the lows over here by the upper first after expansion that breaks down. This is a bearish retest, so it's got to regain the low side structure at 0.003879. Take out that upper second at 0.04016 and take out this range high. It's gotta, if it doesn't, which is also this low over here on the daily, it's got to take out the range high at 0.004226. Otherwise, this is in danger of if Bitcoin melts down and starts to break down to a lower level. Even just stepping down to the weekly monthly support just below price action at 39 to 38.5, you're likely to see this nuke. Yeah. I think that might be it, guys. Let me know if you have any other questions. We're on the 30-second chart. This is your chance. This is the real degen chart right here. Why? Bobby said something that got retracted. I don't know why. Jedi says something about buying shady mints. Gonna mint shade. Yeah. Yeah, go ahead and get your questions in now if you have any, and then I'm gonna wrap it up. Yeah, it's a Friday. Okay, Bobby's doing the real degen work of rolling through all the Bitcoin altcoin pairings. If you happen across a decent Bitcoin altcoin chart, let me know. I mean, I will take a look at ETH just to see. Oh God, 30-second on Bitstamp for ETH, not the greatest, but they are the longest. This looks topped out. Doesn't mean it's not gonna just move up, but looks a little tight. Yeah, a little topped out on ETH BTC right now. I'd be looking for this to head back down. Somewhere around the basis initially at 0.055 Bitcoin. Yeah, it could even come all the way down to 0.051. No problem. Longer term on ETH, I actually will show you. a little bit longer term on ETH. This is a big range, so if it does break down, you saw it bounce very nicely off the bottom side of the range. But I want you to look at the weekly. Now this is on Bitstamp, okay? Look at the bands. It spiked the upper first, so resistance that it was consolidating, broke down, spiked the resistance that it just broke down from, but it also swung the low, right? Now there is weekly lows just below this. Now it's quite a bit, but it's a 0.0432. I would be, if you're looking for a retest down deeper, it's very possible that it could come down, 0.036 to 0.0399. But yeah, if this low gets taken, it's so close to that spike at 0.0275577 area. Sure, but there's 1, 2, 3. You got a low, 4, 5. There's 5 tops in there, so I could see 0.04 to 0.045 where the lower third is being viable. I wouldn't immediately be looking for a breakdown from there. If you look at the weekly is looking to pick itself up and continue, although it has met a lot of resistance on Stoke at around the midline. 0.051 is what you want to pay attention to. It's got to regain 0.06465 area to really start changing my mind to look towards the top side of the range again. UOS BTC on the monthly. It's such a short chart though. It's tough to make a lot out of shorter charts. I'm assuming KuCoin's probably got the most history. I thought UOS BTC on the month. I thought I said get me a good chart to look at. To be fair, it's possible that it could bottom around here. I mean, it looks like shit. Oh dear, UOS. Oh my boy, what have they done to my boy? Look, one of the things you got to understand about the gaming coins, you're likely to see, as crypto becomes more ubiquitous, you're likely to see the major platforms launch their own version of a crypto. That being your Ubisoft stores, your Valves, your Microsofts, your PlayStation stores. You're likely to see a version of their own coins. They got to keep people interested, especially if they don't want people to have physical stuff anymore. There's got to be another way for them to hook people into those ecosystems. So you're likely going to see them release their own cryptos. Ultra looks like shit versus Bitcoin right now. Doesn't really say much about its USD price, but okay, so yeah, I mean there could be integration, like you see a storefront like an Ultra or like these gaming coins that get integrated or picked up because they have already built the ecosystem instead of having to build one from scratch. Sure, yeah, maybe they partner or do something like that, but you're likely to see, Epic Game Store and, Sony, Microsoft. When they start getting into the shitcoin business, it's probably going to be gaming related, because everything that you buy, this is where the securities arguments actually make. This is something that I do want to talk about. So I'm going to get off this chart. We're going to go back to the Bitcoin chart. We're going to look at the 30-second chart, be real degens here. What you need to understand about about one of the bigger arguments for these cryptocurrencies, in particular as storefront assets that can be bought, sold, and traded, is that we already have versions of this. You know, there's already auction houses within video games, there's microtransactions, there's all kinds of things. Now, if your microtransactions in your Fortnite, for instance, like if those are now not just tied to your account, but you can buy and sell them through there, yes, that does open up the securities avenue, right? Because then rarity matters as well. They would have to tighten up all their storefronts and their loot box mechanics, but if you tie that to a shitcoin, you incentivize it. So there is real work being done here. Like, you already have one piece, because most people are just going to side markets to basically trade. Like, I built up this Fortnite account with, you know, these different skins and weapon skins and outfits and stuff like that, or character skins, and I'll sell it, you know, on XYZ platform for X amount of dollars. They're already basically doing this. So having those companies are interested in capturing that revenue, and having that added benefit of, you hold our tokens, they can go up or down in value, right? But the assets that those tokens are used on could be NFTs and tied to your account that then you could trade and sell, buy and sell. And obviously that's what US is trying to do, and these other gaming coins. But the thing is these companies, these gaming companies, are already doing it, and they have easier access to regulators than anyone else. So we will see this stuff eventually come down the pipe, or pike, if you will. It depends on where you're from here in the United States. And this is going to really, when it does come, what you're going to see off the back of that is you will see just regular retail stores also then launching their own shit coins. You know, you got your Walmart, your Targets, your big corporations will get into the shitcoin game, and it's like gift cards. You're gonna load it up. You go to the store, you can load it up, you can trade it, and they're gonna have their own microeconomies. Now, this is going to be a very challenging thing for the SEC to really work through, and that's one of the reasons why you saw the delay in the ETF, the spot ETF sphere. And this is where the guys who are big on some of the shitcoins that you might be familiar with, because of the bank-to-bank transfers, they're mainly looking at the bank transfers and stuff like that. But XRP holders, how you doing over there? I told him it was going to go into I said it was going to go into a long form consolidation after that big spike up. Anyway, they're banking on it being the rails for a lot of this. Now, primarily for fiat in general, or CBDCs, which why would you want CBDCs? It just runs counter to the entirety of the online identities that these people build of being sovereign, brah. I don't think he's one of them, but you know what I mean. Sovereign individual libertarians, and here they are shilling XRP as the rails of the future for things like CBDCs. Like, are you kidding me? You're literally going, you're going against the entire identity that you've built online. But either way, that's a totally different subject. But more realistically, is you could see this becoming the rails for some of these other coins to run on, particularly at retail. That would be one of the big things. I know TIA is an amazing chart because I own it. I own a couple of the other ones there's another one that starts with a T that I own that's doing really well. This is a legit fantastic chart. Brought my opinion on it up and to the right until proven otherwise. Probably going to come down, find a base of support. Maybe even just bounce. It's been so strong, it might even just bounce off the basis lower first area. So somewhere around 1565, 1580. Been great. There's another one that I was also I got in a while ago when we were talking about it way back last year. But yeah, this is an up and to the right chart. It's going to at some point come down and find support. 14 to 1150, maybe even all the way down to like $9. It can go on. It can keep melting faces though. It's the darling in the space right now, and it's already regaining its upper first standard deviation. May even test $20 again and higher. Realistically, 15 to 1565 with the lower first. As long as it's holding that, looking good. If it does come down to the lower second at 1150, then we're getting that lower side test. There is a high-low structure here, so there's a high over here. Nice little low consolidation on a swing and a close, and then we saw it base off of that area at around 1150, 1160. Nice big wick down to pull that liquidity from that higher low over there before coming in sideways. Nice compression and then move up. Probably see something very similar to that if it's going to remain bullish, but if it does drop that lower second at like 1150, 1160, then I would be looking for somewhere around 9.5 again, just like I said earlier. Other than that, it's 20 is very well within striking distance and above. Looks pretty good. You can pull a fib high to low on this, either on a close or on a swing. Probably get some confluent targets up there as well. So, $20. Yep, right at the upper second. The upper third, right at the 1.414. Yeah, if I remember correctly, this was playing so technically on some of the lower term time frames that when it launched, even on the swap side of things, you could see it. It was doing really well. 1618's at $25. So if you take the closes, you're looking at 1618 still $25 even on the closes. So looks good. We're getting confluence from the lows over here to the highs over here at $25, and this swing high, swing low at the 1618. That would probably be the next logical area to look to the upside, provided it gets above $20 and starts to expand again. And on the low side, it's got to hold 1150 to 1365 if it gets there. I agree with you, Jedi. Bobby says, yeah, I'm waiting for the day when some of the mints go public. He's referring to, I'm assuming, ordinal mints. Yeah. Yeah, I mean, some of them are probably going to get listed. I don't know about LIGO. Probably it's got enough volume. That's one of the ones that was really hot last weekend or week before. I don't even remember now. There was another one that just got listed, and I don't remember which one it was. DMT Nat's probably going to do really well. I don't know if they got listed yet or not, but let's look at LIGO. Floor price is shifting around. It was at 0.004. It's now 0.35. It's done almost 300 Bitcoin volume. Market cap's at 360. Holders 11,632. Likely to get listed somewhere on some garbage exchange. So, yeah. 24-hour volume, 13 Bitcoins. Not too bad for ordinals. Not too bad. That's likely enough to entice an exchange. Get a sex listing and then dump it. And when I say sex, I mean CEX, which is sexy if you're a LIGO holder prior to the listing. Jimmy, that's probably a scam coin if I had to bet. LIGO. It's like some weird team that's got pictures of every single major founder of every exchange, and like they minted a side wallet of the same amount, like a whole bunch of shit. So yeah. But I mean, there's if you can get out before the rug, there's probably money to be made, right? Yeah. All right. I think that's going to do it for today. I want to wish you all a wonderful weekend, as we will, we will see likely some interesting price action over the weekend, I suspect, as we did last weekend. If not, it's just going to pin out and go sideways, and then a big move before CME open on Sunday or something, or traditional market open on Monday. But be careful. Keep a close eye on some of the things that we talked about regarding Bitcoin. And yeah, let me go ahead and set the timer for those of you that like to hang out and listen to the tunes for a little bit. Oh, what is it? Go ahead and do this real quick. All right. So I want to wish you all a wonderful weekend. You have a great morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And yeah, with that being said, Landy out. Take care.